Welcome to today's episode of the Daily Trader on the Schwab Network. I'm Alex Coffey in for Kevin Hinks. It's CPI day, and the markets are booming to the upside here in response to basically inline data, I guess, quelled fears of kind of runaway inflation again. But we're not going to spend much time on that macro move, but it is impacting the two names that we're going to look at today. Today we're looking at Meta Platforms as well as Snap, kind of in this conversation around a TikTok ban or a TikTok, buyout or whatever may happen. What is that fallout? What are names that could react positively, could react negatively in some of these different circumstances? Morgan Stanley out with a note saying a TikTok ban could benefit a company like Meta greatly. And that's where we're going to start, which is a look at an example trade in Meta Platforms. Now, both these names are sort of in that awkward period of time where they're quarterly earnings releases are just a handful of weeks here away, a couple weeks depending on which one we're looking at, towards the end of January, early February. So you're faced with that question of, do I want to put an example trade on now that has to deal with these earnings, or do I want to choose something that stays ahead of it? Now, we chose the latter, to stay ahead of the earnings event, not add added volatility. In fact, using this TikTok ban or the potential of this ban as the potential catalyst here for these particular trades. In Meta, what we're looking at is buying an out-of-the-money call vertical, basically looking for the stock to get back to its highs around 630. If that were to happen over the next week and a half, this is a strategy that could benefit. The exact strikes that we looked at, January 24th expiration, the 620, 630 call vertical, so slightly at the money, slightly out of the money, looking for a 350 debit. Break even would be 623.50. You simply add that debit, in this case 350 for this example, to the long strike of 620. You're left with 623.50. You have $350 in risk with a max profit potential of 650. Now, how you find that? Well, the risk is quite straightforward. It's just the debit spent, so that's $350 in this case. Then define the max profit potential. It's a $10 wide spread. You net out that debit, you're left with $650, and that, of course, is the max profit potential. The risk on this trade is you don't get that rally. In real time, about an hour into the market trading day here on Wednesday, January 15th, we see Meta shares just over $616 a share. So you're going to need some help from the market. The market's going to have to rally for this to break even. And if it does rally through 630, that's where, of course, the max profit potential is through the end of next week. Let's look over at Snap. Snap's another name. Now, these two names went in different directions in 2024. Meta had a really blockbuster year, making new all-time highs. Snap, not so much. Snap had a pretty rough go at it in 2024, going the other way. But today is making a nice move, 7.5% jump to the upside. Some of this overall market move is, kind of beta is jumping, but also this TikTok kind of rumor mill or speculation on what might or might not happen could have benefits ripple through the existing social media and digital advertising companies. Snapchat, of course, one of those, looking to get some of those ad dollars if they are dispersed around to other platforms. Now, because of its underperformance and because of its lower stock price and higher beta nature, I looked at a strategy that does not cap the upside potential. It also gets an extra week in time, still staying ahead of that earnings event that's slated for the early parts of February. But we're going out to the end of the month and simply just looking at buying a call. It's the $12 strike call, which is now slightly in the money by about 20 cents, but you're spending close to $1 in a debit. We're using $1 for the example trade here. For the purpose of this example, that means $100 in risk, but it also means your break even's at 13. So this market still has to rally, snap another 80 cents by the end of the month just to break even. Now, the interesting thing is, though, and I think one of the things that draws traders to this particular strategy is you see that max profit there on the screen says unlimited. So if for whatever reason Snap saw a tremendous move, I'm not going to put a dollar figure to it, but let's say significantly higher than 13. Unlike in Meta, where there was a max profit with that trade, this one's going to perform penny for penny with that theoretically through the end of the month. But you do got to get through 13 for it to break even. $100 in risk on this trade is, of course, the max downside. So again, limited downside, unlimited profitability, one of the things that draws traders to this particular type of a strategy. But one thing I always say, and this applies to both the examples that we looked at today, if you can make more than you can lose, and your break even is higher than your current share price, and you need the stock to go up to make money, of course, that should tell you that maybe it's not the highest probability of success, but this market is, of course, efficient, and all those things are going to be accounted for in the risk and pricing. So with this, $100 in risk, you need some help from the market, but no capped upside if Snap does really see its momentum pick up here through the end of the month. Thanks, as always, for tuning in to The Daily Trader, and we'll see you tomorrow.